What's going on, traders? Welcome back to day 4 of 25 days of trading. Make sure you tune back in every single day at 11 a.m. for another new video. Now, today I want to talk about the 15-minute opening range. I have a whole strategy wrapped around it using the VWAP as well, but I want to just show you how I use it as a key level, how it traps a lot of amateur traders, and how I try to navigate these two simple levels, right? So first off, for anyone that's unfamiliar, the 15-minute opening range is the first 15 minutes of the New York session. So I have it marked off with horizontal lines here from the high and the low between 9:30 and 9:45. So it's going to play a huge role in saying who's in control. What side are we outside of the range? You can see in this example, we're kind of just stuck in the middle. Now, one tip I'll give you right off the bat, and again, I discuss all of this in Futures 2.0, which is my free strategy on ASFX TV. Don't chase the first break in either direction outside of this opening range, right? That's where it induces a lot of amateurs to chase breakouts. And every now and then, yes, you'll have strong trend that just carries it lower and lower or higher and higher. But for the most part, consistency-wise, you don't want to be getting trapped at the worst price in the fake out most of the time and sometimes reversal. So we let the first break come in saying, all right, well, sellers just took a stab at the lows. Let's see if sellers can maintain this control, right? So when we come back to New York VWAP, we fail to make a new high of day. Now sellers take back control from this New York VWAP, which is anchored from the New York Open, right when that 15-minute opening range starts. Now I want to sell it back down, right outside the opening range low for a second time. And you can notice it's the same price that it really moves from, this opening range low. But the timing that you try to go get that break or that second break is very important to distinguish, right? Let's take a look at another markup here. Clearly buyers are in control at the open. So I'm looking for longs today. And here's a break of the open range high. Now that's a strong price to try to be buying it at after a strong run up. But it is the first break. I'm not chasing that. Once it comes back inside the range, I'm now pairing it with this New York VWAP, again, anchored from the 9:30 New York Open. I want to see who keeps control here. Ideally longs because they're in already, right? So once buyers defend that VWAP, now I'll go get the second break of the opening range high. Just go continue the trend. Now, ideally, we stay outside of the opening range, right? After this early play, this is at 9:55 in the morning. So yeah, we're probably going to be still inside the range. It was just set 10 minutes ago. But in the afternoon, we would ideally be away from these levels. That's going to signify to us that we are trending. And you'll see some markups of that as well, like this. We were stuck inside the range, and this is where it gets sometimes busy, that you're better off just waiting for a break outside of it. And not only break of it, but holding outside of it, right? So today you can see shorts. But even if it broke the high and remained outside the open range high, that's going to be where you probably find your cleanest trades. Because if we're outside where we were in the first 15 minutes, that's a great sign that we're probably trending, right? Think about it. If here at 9, or this is at like 10:20, almost an hour after the open, we're pretty much right where we started the open, but we're still within the same range we set in the first 15 minutes. Why haven't buyers or sellers left from here, right? Clearly, there's no one side in control, so that's why ideally we'll be outside these levels by 11 o'clock or whatever. And it's a great level to trade off of, key level-wise, right? So this is just a strong drift lower. We're not going to jump in on that. I need a key level retest. And here's the pullback to New York VWAP and this open range low level. It's a great level to find break and retest, or the breakout of it, right? Just not the first breakout of it. And you find shorts back in the direction of what now is clearly a bearish trend. But if you're saying clearly, I don't know if it was clearly a bearish trend when it's just kind of moving sideways inside that range. But now that we've made our way outside of it, retesting underneath it, I think it looks more so bearish. So now you can find better trending opportunities. Similar to this day, this can even be made for an argument. First break of open range does run, right? Maybe 50 points here on NQ, however you want to classify it. Maybe that's a trade in and of itself. I don't really like those. I don't know where the stop wants to be. And again, they don't happen all the time. So we just let it move higher. Let it pull back to the opening range high. Same level I wanted to maybe buy it at earlier here. I could do it again, maybe now 30, 40 minutes later, and get another clean pop back in the direction of trend. And notice how cleanly the trend is moving today when we're outside of the opening range high, right? That black horizontal line on top, that's the high. We're outside of it, and we're retesting it. Similar to how the day prior, we're retesting it, but at like 11 o'clock, where it spent a lot more time inside of it, where today, immediately outside, buyers are in control. They're holding that control. Clean, great. This is not clean. This is stuck inside the range. No one side of buyers or sellers are clearly in control, right? You could even see first break of open range low. Doesn't run anywhere. Then it breaks out of the high. Rejects a VWAP on top. Can't make it to the low here. Back in the middle. Breaks the... It's just ugly, right? So clearly no trend, whether you use a VWAP or open range high or not, but you're probably best waiting for it to break out of these ranges. Now, if you're going to trade inside the opening range, my advice would be we'll take a look at a markup from an extreme. But on any ranging day, I'm trying to get price as close to VWAP as possible, right? Rather than chasing the breakouts, if I can position myself before it does pop, right, aka along this VWAP, then all I need are these 2 minutes, rather than seeing those 2 minutes pop and now I'm getting in on the breakout with all the amateurs just to get smoked, right? So just keep that in mind for ranging days. Now this is maybe probably the more advanced way to use it. There is a 15-minute chart that should go with this. But another way to trade the opening range, which we do on stream all the time. So like I said, if you want to sign up for a free month of stream, just click the link in my bio or go to ASFX TV and use code FIRST. An advanced way to use it would be trading inside of it. It's not one of my favorites, but it is a viable option. That if you're going to do so, break above New York VWAP would be the entry signal for this long, right? You see sellers come in, kind of trying to trap some shorts. After a lower high, the shorts don't continue, right? So all the people shorting it are now freaking out once it pulls back. So now the second time that buyers take control, if you're trading in mid-range, it's not perfectly mid-range, but mid-range, stop loss has to go at the bottom of range, and you're trading to the top, right? No matter how big the range is, no matter where price is at, where you're currently trying to trade it, that's the rules behind it. Stop loss at the low, take profit at the other side, right? Because we don't want to have to wait for the break that doesn't maybe run outside the range, right? Could it go higher here? Sure. But the safe exit is top of range. Just like if it does break out of the bottom of the range on this long, I don't think you want to be long anymore. We're dropping for new lows of day. That's not a good long position. Get out of that, right? Now this, going back to maybe the first break of open range high, definitely does run here, right? Clean, just drifts higher. You have to have the confidence in it, doing your own markups, studying my futures 2.0 strategy. It will pull back, at least close to the New York VWAP, or give you something better than just chasing drift higher, right? This is just all one move, in my opinion, right? It's just one move. Giant buyers are in control. No real pullback for me to try to trade. So I got to sit on my hands, wait for it to pull back to open range high or New York VWAP. We can see today it doesn't pull back to open range high behind these notes here, right? There's no pullback to open range high. But that's not my only way to get into a trade. I'm still using VWAP, but I'm going to still use the fact that we're well outside of this open range high, right? You can see price up here. It's well above this open range high level. That buyers are clearly in control and we're trending very strongly. So I feel comfortable in the direction. That's no doubt. And now you use your VWAPs to just get into the trades, right? So open range high doesn't really play a part in putting you in this trade. It's just giving you the confidence that we're trending. I mean, look how far this New York VWAP has left outside the opening range. That's strong. When you look at some of the other markups, obviously that one's going to be in the middle, but it's very close to the open range high here on a normal day, average day. But on a strong rip higher, it's going to really move away from it. So another way, looking at it here, this was just my trade this week. It's the same idea. Here's the first break. Does it run higher? Sure, but maybe someone chased shorts down there earlier. Let it get outside the range. Let it set the tone for the day and return to this level. And I'm not interested in shorts because the trend is still overall bullish today. Hopefully you could see that, with just buyers in control, still building bullish structure underneath. That I want to be long around this New York VWAP and opening range high. When those line up on each other, now I have like two launch pads to elevate my trade higher rather than just one, like back here, right? This is just off of New York VWAP. When I have both of them lined up together, I'll know pretty quickly if trend is going to continue bullish from here or we're wrong. We're going to shift trend and move back lower. Now, another thing to keep an eye out for as well is the Edgeful report. They have an opening range breakout report. So this is just on the standard side of things. You can filter by many different things. Let's go by weekday. So by weekday, let's go to Monday. Monday's 46% of the time it double breaks. Not that strong. But Tuesday's 69, 70%. That's a little bit stronger. But let's take it to the Monday one because this markup is on a Monday. So on a Monday, 46% of the time, let's call that a coin flip, 50-50 chance this double breaks, not the strongest. So there's the first break of open range high, one break of it. Now, do we double break it? Would we have to break the bottom down here as well? Well, it's like only like a 46% chance. So I don't know if I'd want to chase shorts here to try to go get a 46% probability. And then when buyers get back outside the open range high, I'd be saying, yeah, there's no real strong target below. It's only 46. So I'm comfortable trading back away in the direction of this first break, right? But let's say this was a Tuesday trade. When it's a 70%, then maybe it breaks the high. Sellers can step in and also break the bottom because it's a little bit more likely 70% of the time versus 46, right? So definitely keep that in mind. Check that out. You can start a free trial for them, study these reports, play around with them, see if you want to use them in the long run. But that's how I use the opening range. I also have chapters on it here in my free strategy, like I said. So to get free access to it, just click the link down below. You'll also get access to the live streams where I'm taking my trades every day. But I have a whole key levels chapter here, right? And a bunch of markups showing how I trade them together. So I appreciate you guys tuning in. Make sure you guys subscribe, and I'll see you guys on the charts tomorrow morning.